Hello, welcome back. I wanted to make this video because I think it's going to be very beneficial for people, at least those who are not really aware of what is going on with the other major stock markets. So you will typically see that in my channel I tend to talk a lot about US stocks, and then I also talk about Chinese stocks quite a lot. And there is a very important reason for that, and I will show you why that is the case. Now, of course, this is not the only stock market. Obviously, there are many different indices or indexes, whatever you want to call them, from all sorts of different countries. But what I do prefer is taking the path of least resistance, is basically picking these stocks that have the highest chance, highest possibility to actually yield some money back to me. And this makes sure that I get as less risk as possible. That is the whole reason behind pretty much using US and China for the most part. Now, there are some other countries as well that are very interesting. And I wanted to create this video, which is going to be a relatively short one, but I feel that it is very interesting. We will see here how major indexes really compare from other countries compared to the United States S&P 500, which is what a lot of us are actually investing in. You will see this from 1990s when this chart will be starting at, and we'll see the same charts for all sorts of different countries here. You will see that for the United States, it started at about 400 or so, where it was here back in 1990, and climbed up to more than 3,000, and the gain is 901% since November 26, 1990, that is. And next up, we're going to examine two more countries, Germany and Canada. Now you'll see here that Germany is doing fairly well. It's actually very close to the S&P 500. And so as you'll see, the German market has been a close performer to the S&P 500. You see that it does follow a similar trajectory here. So this implies that Germany, being of course a strong economy as well, seems to be heading kind of similar to what the US is doing similar things. But still, the US is beating Germany as well. Now, Canada, as you'll see here, the TSX, has risen actually over the past years, but you will see that it is a much slower pace here. Look at this. And when the S&P 500 was peaking, Canada was peaking at a much slower pace here. And especially when the S&P 500 had its massive highs here, Canada's index actually stayed about the same. Now, you could of course say that the past performance doesn't guarantee future results, and that's of course the case. But I just wanted to show you the dynamic of the economies, because that also matters quite some. And so it's good to at least know about these things. Now, Canadian stocks could be interesting purchases right now, but you probably have to be a little bit more careful about what you're buying. You kind of want to get the creme de la creme, pretty much, and avoid companies that are mediocre, especially when you're investing here, because you have a lower margin for error here. So, next up, look at Japan, Nikkei. So it peaked back in 1989, actually, before this chart starts. It was at its peak. It was the world's second largest economy, and then it has only gained 1%. So if you have been invested in the Japan Stock Exchange index since 1990, you basically gained 1%. You actually lost money due to inflation, a lot of money, that is. So you'll see that this is pretty horrible here, very horrible performance. Now, this could be a potential runner in the future years, who knows, but right now you'll see that it is not sitting pretty here. Now, France is sitting at 268% compared to the S&P 500. Its peak was back in 2000, when it was still below the S&P 500. This is why it's probably also not a good idea to invest in, at least in a lot of French stocks here. Now, Hong Kong is much better. It's similar to Germany. It's actually a little bit more than Germany here. And as you'll see, it's sitting at 824%. Remember, the S&P 500 was at 901. And the United Kingdom index, you will see that it has been at about 238%. So you may want to think twice about holding these UK companies, really. And this is what I wanted to talk about in this video, a fairly quick and short one, but I kind of thought this was a very, very interesting topic to talk about, in case people were actually interested in knowing what are the other stock markets doing, some of the major ones, when compared to the US. And this kind of shows you why I really, really prefer, for the most part, to invest in the United States. And when the time comes and we have like a correction, a major correction in a market like the Chinese market, this is why I'm buying quite some Alibaba right now, for instance, and I'm looking at Chinese stocks in general, because I know that their stock market can run. And so if that's the case, when it goes down, it has the potential to keep on running in the future, because it's a strong economy, it's a strong market, good things can potentially happen. So hope you enjoyed the video. If you did, please leave a like and remember to subscribe. And I'll see you in the very next one. Again, this was a short one. See you soon. Bye.